future of money, a new format of money, which is the digital token. Not how you make a payment with that, but how the payment is being processed. If you use blockchain, a completely different infrastructure to make these payments. You mine it, right? You can then use it. It's not a liability of anyone. So it's an external money.
I witam Państwa serdecznie w naszym studio kongresu Futurist of the Year 2024. Naszym gościem jest pan profesor Ousmène Jacques Mandeng. Witam serdecznie. Hello.
Hello.
No i tutaj się przełączamy znowu na język language. Nice having you here.
Thank you.
Thank you for being here. Your prelection was quite fascinating because we are talking about the future of money. And the future of money, well, it can go many ways.
Mm-hmm. Mm-hmm.
Money can change to the matter, to the substance, of which we are not quite completely aware of. Money can become totally digital. They can become in a form of blockchain. Who will produce it? Who will own it? Those are one thing, but there's always the question of intelligent money. The money that make their own decisions. This is a view of future that really is fascinating. Money from your wallet just making buying, shopping decision, investing decision for you. So let's start with a simple question. How does the future of money look?
Is that a simple question? Well, look, I mean, the future of money, what I try to emphasize in my talk was where I see the innovation is the adoption of a new format of money. So money today exists in two forms. One is the banknotes, the physical tokens, and one is book entry money, which is just a ledger entry, right? So book entry money is the bulk of money that we are using for our day-to-day transactions. Okay, the innovation with the new forms is a new format of money, which is the digital token that lives on the blockchain. And the most interesting thing about it is not how you make a payment with that, but how the payment is being processed. So rather than using the conventional, what we call rails, which is basically how banks amongst themselves clear certain payments.
You've got gatekeepers, approvers.
Exactly, everything. The idea is now to process it quite differently. Now, because you said gatekeepers and approvers, I'm not saying that this is without gatekeepers. The gatekeepers will still be there. Payments will still need to be checked for know your customer, money laundering, sanctions, etc. So that will not change.
But is there a need for a gatekeeper if you have blockchain?
Absolutely, no, there still is, because all these checks will still need to be performed. It's just then, once you press the button of making the payment, we are using, if we use blockchain, a completely different infrastructure to make these payments. But all pre-checks will be exactly the same, you see. Now, we are talking about monies of regulated entities, so banks, central banks, etc. Of course, there is the crypto world where these may not exist, but that's a different world, you see.
We have ongoing development of CBDC, right? How does this look today around the world?
So, as I mentioned during my lecture, when I started 5 years ago, central bank digital currency, the term didn't even exist. It was very exotic. Very few central banks were working on it at the time. And I think with Accenture, we really pioneered this work. Today, most central banks are working on this. And in the Eurosystem, we, of course, are working on the digital euro, which most likely will come. So there has been a lot of activity. Central banks, I think, they work on two streams. One is a CBDC, central bank digital currency for the general public, so to be used in payments at the point of sale and in person-to-person transactions. And then for wholesale payment, that is for interbank clearing, so typically for securities and foreign exchange settlement. So central banks are advancing at different paces on both. I think it is in particular the wholesale payment which is of particular interest, because this is where the features of blockchain are of particular relevance. And so if there were a prediction, then I think we see more adoption on the wholesale side than maybe we will see on the retail side. But there's a lot going on in that space.
As I look at CBDC development and all that matter, I'm always thinking, I'm having this big, really big why. Why is it, I don't know, necessary? Is it, it seems doesn't.
Okay.
You know, it isn't necessary because we have our money that are based on some value, like gold or whatever, right?
Our money is not based on gold anymore. But okay, look, again, the idea is a new format of money. So the Central Bank of Poland today is issuing banknotes, zloty banknotes, and reserves, but only to commercial banks. And the idea is, with central bank digital currencies, a third format as a digital token. So in that sense, it's still the same issuer. You see, money is a combination of who is the issuer and then how the payment is being processed. So money typically is being issued mostly by banks and also by central banks, you see. Part of the discussion is, in the crypto world, is that money suddenly is issued by non-bank actors or even non-financial institutions, you see. And that is, to some extent, is new, you know. And I mentioned in my talk, Bitcoin is in that sense a little bit like gold, right? So gold is in the ground, you dig it out of the ground, it's not a liability of anyone, and yet you can use it, theoretically at least, in payments, you see. Bitcoin is the same, it's just an algorithm, you mine it, right? You can then use it, it's not a liability of anyone, you know. So it's an external money. To our financial system. But again, the cryptos are a completely different world. Our ambition here is to use new tech to allow payment processing to move into a new direction, where we hope that we attain much greater efficiency gain than what is possible today. Don't forget, if you want to make a payment today, it's still faster. You take a plane from Warsaw, pack, you know, whatever dollars or whatever you have in your suitcase. Take a plane, fly to New York, give the suitcase to the beneficiary. It's still faster than making the payment electronically, and that just shouldn't be. You know. Now, I'm not saying that Bitcoin is that blockchain is the only way, but it is certainly a most promising way to allow bringing more efficiency into how payments are being made. You know.
Okay, I'm a huge fan of the 5 why strategy approach. So if you want to understand something, give this topic 5 times a why question. So let's take it a level deeper and let's answer to the question again, why?
So I think there are a few practical questions, and it depends a little bit who you ask. So ask a central bank. A central bank may say, look, for the general public today, I only provide a banknote. Is that really still the instrument in the 21st century, given the increasing digitalization of our economy? Probably not. You know. So probably I want to give citizens something that is a little bit more attuned with the times, and that's probably going to be a digital instrument. You know. So that, I think, is a very pragmatic way of saying why we should move beyond at least banknotes. And for banks, banks may say, look, you know, I give you a deposit, which is a ledger account, but if you want a little bit more flexibility with that, I can issue that deposit also on blockchain. And that, you know, would allow you possibly greater flexibility in conducting payments. You know. So again, it's about flexibility. It's probably about new business models. It's about diversification in particular. If we have blockchain-based instruments next to ordinary instruments, it could mean more competition. Competition typically leads to more efficiency. So it's also about driving innovation, competition, efficiency in our payment system. And I think an important thing is, your question about why is of course a very good one. I'm often being asked, what is the problem you're trying to solve, you see? And I think it's the wrong question, because if you ask me about the problem I need to solve, it means I'm going to solve problems I know of today. But blockchain is a lot about problems that may lie in the future. It's about addressing new payment problems, many of which we don't even know yet they exist, you see. So I hope this is also about a new, you know, an opening to equipping our financial system with new capabilities to address future payment problems more effectively.
Okay, the future payment problems that we don't know anything about yet.
That's right.
So we do it just in case, right? You mentioned the flexibility of the transactions as the advantage, one of the advantages. When there are those developments of the CBDC, like the digital euro, I think the latest status is that it won't be for anybody, because like it could be more dangerous in terms of privacy and knowing what the citizens do, because this is one of the, let's call it threats of the digital money. So basically, I think the digital euro is at the moment seen as only a method of transactions for the entities, not for the citizens.
No. The digital euro is meant to be for the citizens, for natural persons, not for businesses and not for banks. So it is only to serve as a payment instrument for citizens. The concern about privacy, yes, it is a concern. Is it that now that the central bank will issue a digital payment means that is, in theory at least, it won't be in practice, but in theory traceable? Is that a concern for citizens? It could be. On the other hand, look, I have to admit, I'm surprised we're having this debate. Citizens, you know, when they use electronic payment means, and that are most of the payments we make by value, right, do not seem concerned with privacy. But suddenly when our own central bank, right, which should be seen as a trusted actor, is making available an electronic means, suddenly privacy becomes a big problem, you see. So I'm surprised by this, I have to say. And I hear a lot about these sort of statements along the lines of an autocratic government, full surveillance of citizens and so on. I can see that there are certain sensitivities, you see. So it depends, I think, on the setting in which this takes place. But surely an autocratic government doesn't need a digital euro, to exercise huge surveillance on its citizens. So therefore, I think, again, if citizens are concerned about privacy, I think they should go to Parliament and enforce stricter privacy rules. But it isn't the duty, I think, of the ECB, to provide privacy for their citizens. That is not what central banks are meant to do.
Well, of course, that's one point of view. The other matter is that, we as the Europe are seen as the over-regulated market area, but at the same time, in the USA, those, I think, works for the CBDC were stopped. Why?
Well, in the US, the debate is a little bit different. It's true that the Federal Reserve System has done, amongst the leading central banks, probably, well, I should say, it's probably not one of the leaders when it comes to work on CBDC. Okay. The US has taken the view that it doesn't necessarily need to be the first to developing this. It also takes a special view, of course, in light of the international role the dollar plays, so it wants to be particularly cautious. I sympathize with that fully. Right. There is also a little bit the politics about anything related to blockchain. Unfortunately, in the US, is often seen like a crypto-based initiative. Right. Again, cryptos have nothing to do. We're just using the same technology, but it's not because two entities use cloud technology that they are comparable, right? So I think that holds for blockchain as well. So yes, there is skepticism in the US. On the other hand, there are huge advances as well in the US. So for example, in the US today, you can issue securities directly on blockchain, on public blockchain. Right? So in that sense, the US at times is much further ahead than Europe is. So I think it's a little bit of a mixed bag. Given the special responsibility the US has regarding the dollar, I can see why they are being cautious, but I hope going forward that we can clearly distinguish where we use blockchain for processing transactions and where we talk about cryptos, which is something completely different.
Well, my next thought is, what's the sense of having numerous CBDCs while you could have just one global CBDC?
Okay, no, look, I mean, we have national currencies, right? Poland has a zloty, even though you're a member of the EU, so you will have to adopt the euro, right? So, again, a CBDC is just a different format of the same money. It would be the same zloty, the same euro, but in a digital token format. So the discussion of whether we should have an international currency is a completely different discussion. And I think one that, in theory, makes a lot of sense, but in practice is very, very difficult to implement.
We all want to have more or less national money, right, or regional.
I think I think it's fair to say that, you know, we will for quite some time. I mean, in Europe, of course, in the euro system, we have given up our national currencies, of course. So the euro is a foreign currency for all its member states. So that's a, you know, that is a pretty extreme sort of. But you know, that's what we chose to do, and I think it's a fantastic project. But to go to an international currency, truly, that is used globally, I think that'll be a long, long way. You know, I think it's much more likely that we have national currencies that will play increasingly a role in international payments. That certainly is the ambition of the euro as well. I think we want more diversification. You know, we know countries like China, India are promoting their currencies to play a bigger role, you know, so they are less dependent on a very narrow set of currencies that we're using today. But I think that's a much more likely direction of travel than, say, the ambition of a global currency.
Going back to CBDC at the moment now, what's the role and how the role changes or will change? The role of the central banks and the role of banks, the commercial banks.
Yeah, yeah. Look, I think in principle nothing will change. Right? Central banks still issue central bank money. Banks will still issue bank money. If a CBDC were to be introduced, it would probably be distributed via the commercial banks. That's the same way cash is being distributed today. So cash is issued by the central bank. The commercial banks keep it in their ATM machines, etc., and then distribute it to the general public, you know, on demand. Okay, and with a digital euro, for example, or digital zloty, whatever, you know, it would be exactly the same. So the division of labor between central bank money and commercial bank money will not change. There's no reason per se it will change. But there is a concern, and maybe that is where you want to go, about disintermediation of banks. If I have a digital euro, do I need a bank? Okay.
Right.
And I think
I have my wallet, and it's perfectly safe.
It's central bank money, so it's the safest money, so why do I need a bank? And banks are concerned that there could be a migration out of deposits into the digital euro.
Banks will go out of money.
And then banks will go out of business. Yeah, go out of money and business. Look, to be honest, I think there is very little to suggest that this is the likely direction of travel. If security were a primary concern of citizens, then we would see, in particular in times of distress, movements from small banks to big banks and from private sector banks to public sector bank, right? If security were a major concern. We looked at the data. There's very little to suggest that this is the case, even in times of distress. So to assume that because citizens could have access to central bank money conveniently will make them abandon their bank account, there's nothing in the data to suggest that, you know, it will happen. Okay. If it were to happen, right, and there are two things here. One is the cyclical movement, and one is the structural movement. Right? So the structural movement is more problematic. The cyclical movement can be accommodated through liquidity facilities provided by the central bank. The structural movement means that banks have to change their business model. Okay. And by the way,
it's good, they say.
Well, you know, yes, but you want it orderly. Now, if we look across the euro system, what is interesting, and here I exclude Poland, but what is interesting is that and the concern is mostly where banks are funded mostly by retail deposits. Okay. Now, smaller banks and banks of the lower income countries in Europe tend to be more funded by retail deposits than big banks of the higher income countries. So we already have a divide in the euro system. It's not it's not very homogeneous how banks depend on retail deposits.
Well, private deposits are the basics of banks. The corporate deposits, the corporate banking is at most 50% of those big banks in.
But it depends. You're quite right. But it depends on the where you go. You know, for example, there are some countries where retail deposits are only 30-40% of the entire deposit base. You know, so it depends. But the point is, if it were to become a problem, then you adjust policy. Right? I think the idea shouldn't be that this is about protecting or undermining the business model of banks. It's not about that. it is hopefully that if we see, as a country, a public interest in promoting more diversification of our payment system by the adoption of new mediums. So if we see a social gain in doing so, then I think we should be doing it, you see. If banks will be relative losers, well, but if we have a social gain overall, because it's beneficial for the country, then we should still do it.
Well, taking a look at how the matters are figured out about the automation and the robotization and AI in the workplace, and workforce, and they're saying like deal with it. So I don't know if we should like worry too much about the future of banks. Who cares?
I wouldn't say that. I wouldn't want to say that. I think we should. This is not about undermining the future of banks. I think banking always, will have a role for a long, long time.
We'll see. Thank you very much.
Okay.
Dziękuję Państwu i teraz zapraszam na krótką przerwę, a po niej kolejny wywiad.